All right, it's Wednesday. We have a couple big companies that have reported earnings just recently, and I thought it would be fun to go through them. Some people want more of like an initial reaction video where I'm diving through the numbers along with you. So this isn't going to be a public video. It's just for patron members. And I thought we'd look through some of the reactions of what's going on and the numbers. First of all, we have Microsoft, which right now we're looking at the after hours price, and it's down 1%. So 1% down after earnings. My prediction on Microsoft is that the earnings would be great. They'd beat on the top and bottom line. If we look at what happened here, we can look at this account. It has a bunch of data on these companies, and they beat on the top and bottom line. We have earnings per share here. We have revenue. Earnings per share were up 10%. Revenue was up 12%. Net income was up 10%. Intelligence cloud revenue missed estimates by a couple percentage points. Still up 19%. My guess is the reason that Microsoft is down 1% is just the intelligent cloud. This is basically the cloud story. Investors see this as the biggest KPI for this company. Just the most important thing is the cloud story. So a little bit of weakness in that, even though they beat on their overall numbers, that weakness is going to cause it to be a little bit of a soft response. So far, this looks, Microsoft is so predictable. I'm never too concerned about it. The segment revenue breakdown, business and productivity up 14%, all the various business segments growing at various numbers. Intelligent cloud revenue, again, up only 19%. I think investors were looking for like 20 or 21. We have a basic overview. Satya Nadella says we are innovating across our tech stack and helping customers unlock full ROI in AI. Our AI business has surpassed a $13 billion annual run rate, growing 175% year over year. So he's trying to tell investors, look, we are getting a return on our investments in artificial intelligence. It's not just investments. We're actually getting a RO on the investment. We're getting a return on. And so far, it's $13 billion run rate, which is a start. Not a big business for Microsoft, but it's good. They said this quarter, Microsoft cloud revenue reached $40.9 billion, up 21% year over year. We remain committed to balancing operational discipline with continued investment in cloud and AI infrastructure. Operational discipline, continued balance. I like it. Great report. Overall, I don't see anything wrong with it. I'm going to have to dive in, listen to the earnings call. But, this isn't unexpected. A company can beat on earnings and have decent earnings. And with Microsoft, most investors are expecting that. Like, it's kind of priced in that they're going to do okay because they almost always beat. So it's not, I think, a huge confusing thing that Microsoft is down 1%. And it is trading at a rather lofty valuation. So there's no big surprises here. Microsoft has been such an incredible company. The past year, it's been a little flat. The past 5 years, it's up 156%. So it's one that I'm going to continue to hold. I'm not selling it on this report. I'm not going to be buying more of it. I've just have my shares stocked away. I'll continue to hold it. Next up, we have Tesla, which is currently in the green. Now, it went down today, and then it bumped back up 3.6%. And this one, Tesla missed on almost everything, and their misses were pretty significant. This wasn't like a narrow miss. They missed on the earnings per share, 73 cents compared to 75. So the earnings per share adjusted was not a huge miss, but then the revenue miss was pretty big, 25.7 billion compared to estimates of 27 billion. They're down around 2 billion underneath their estimate. That's a pretty decent miss there. Their margins, the gross margins were a miss, 16% compared to 18.9 expected, down 138 basis points year over year. The operating margin was only 6.2%, down 200 basis points year over year. These aren't great numbers. Maybe investors just had a ton of negativity looking into this, but these numbers aren't good. There's no way to sugarcoat it. Not good numbers. And this has been an ongoing theme of Tesla missing their estimates repeatedly. If you look over the past 2 years, they miss them 80% of the time. So we're seeing a company that's struggling here, struggling with growth. Total automotive revenue, $19.8 billion, estimates were 21.5, down 8% year over year. So the company's shrinking with its automotive revenue. The energy generation and storage revenue is a bright spot that beat estimates by around $400 million, up 113%. That's overall a smaller portion of Tesla's business, but right now that's probably my favorite portion. Then you have the services up 31%, which also it came in a little bit above estimates, so that one was fine there. We don't have any commentary here. Executive commentary says the CEO, Elon Musk, Tesla continues to scale production and invest in autonomy. While margins were impacted this quarter, we expect a long-term growth to be driven by AI, energy, next-generation vehicle innovations. Very, very broad. While this quarter didn't look good, in the long term, AI is going to help out the company. When I look at Tesla, it's a company that's clearly not being invested in by investors, traded in, and held by people that are concerned about the financials of the company. They're just not worried about it. When you have a company report these numbers and the stock is up 3.5%, 6%, when you have it trading at these multiples and it's up that much, that just signifies that the investing base that Tesla has accumulated over time are not focused on the numbers. They're focused on the story of robotaxi, the story of autonomy, the story of humanoid robots and artificial intelligence. So they have their eye on the bigger prize. They're looking at these things long term. They're not concerned about whether or not they delivered X amount of vehicles and got this earnings per share and free cash flow per share. And this is interesting because it creates a little bit of like a divide between the believers and the non-believers. Any company like Tesla, that the whole market cap is heavily dependent on future narratives and stories, creates this divide of a group of people that truly believe in all the endeavors that Tesla's working on, that they're going to be a dominant robo-taxi company with millions of cars zipping people around, that they're going to be a humanoid robot company that everybody has their humanoid robot doing the dishes and doing the laundry and cleaning up the house and emptying the garbages. There's a group of people that believe in all that. They're on one side of this divide. And then there's the group that goes, no way, it's too crazy of a narrative and of a story. It's too out there. I'm not going to buy this stock. And I just believe that right now, Tesla has curated and found their investment group. Because you can't explain this through valuation. All the metrics, it shows it's pretty highly valued. And you can't explain it through its performance on a quarterly basis. This type of movement has to be explained by the people that are currently in the stock, focusing way more on the long-term potential, not on any of the numbers today. Now, if we move over and we look at Meta, this one just reported. Is it really down? I can't believe Meta's down. Let's take a look. I don't own any Meta stocks. I'm not upset about this. Oh, it's trading around. It's zigging and zagging every 5 minutes. So Qualtrim updates the aftermarket's price around every 5 minutes. So this number will keep updating. When companies just barely report, it can trade like 4% in 5 minutes. So the number's accurate, but it will update every 5 minutes. I think it's going to trade around like crazy. When we look at Meta and what they reported, we have it right here. Meta's report was so good. Earnings per share up 50% year over year. Crushed estimates. A full dollar, over $1 above estimates. Just crushed it. Revenue up 21% year over year. Crushed estimates, a whole $1 billion more. Advertising up 21%. That's basically the same as revenue. Like it's very similar. So when they break out advertising revenue, most of the revenue comes from advertising. This is a part that it's astounding to me. The user and engagement metrics, family daily active people on one of these things every day is up 5%, 3.35 billion. Is that real? Are there even that many people? I know there's like 7 billion people out there, but 3.35, so half of planet Earth, more than that, is using Meta's stuff every day. Just incredible to me. It's astonishing, and it will keep growing. Like it just keeps going up. It's really impressive what they've done. Ad impressions are up 6%. Average price per ad is up 14%. You can probably thank AI for that. They've really done an excellent job implementing AI into their business. Profitability, the margins look incredible, up 43%. Operating margin, 48%. Operating income's up 43%, sorry. The operating margins are very high. Net income, $20 billion, estimated $17 billion, 49% increase. Huge net income this quarter. Now, free cash flow was $13 billion, estimated $10 billion. Now, in their free cash flow metric they're reporting here, obviously, they added back stock-based comp, so that's around 30% of it. But even if it was like $8 billion or $9 billion, when you net out stock-based comp, that's still insane. These numbers are incredible. We expect Q1 revenue growth of 8 to 15% with 3 FX headwinds, that's currency conversion. So 3% is impacted by currency conversion. 2025 infrastructure investments will drive expense growth, particularly in AI and talent acquisition. This is what's causing the stock to go down. So right now, these numbers are insane. They are insanely impressive. Like there's just no way. There's no other way. Everything's going up like crazy, up and to the right. Margins are increasing. The user base is increasing. The ad effectiveness is increasing. These are great numbers. I truly wish Meta's like one of the companies that got away. What I did a couple years ago is I saw Mark Zuckerberg going into the metaverse and making goofy headsets with like 3D models and stuff going into the metaverse. I was like, this isn't it, Mark. This is not where your efforts should be right now. Now, Mark Zuckerberg intelligently pivoted from the metaverse into artificial intelligence. And that was like the right move to make. As soon as he did that, investors got back on board, Wall Street got back on board, profits soared, cash flows grew, even their infrastructure saw big ROI. And he's kind of forgotten about the metaverse altogether. It's like that meme of like, you're turning around and you're checking out the AI and the metaverse is there, like upset that you're checking out the new AI thing. That's the meme right now. He has completely pivoted away from the metaverse into artificial intelligence, and the stock has responded. In fact, I think that Meta, if Zuck could go back in time, I don't think he would want to name the company Meta. I think he would want to name it something AI focused. All their time, all their attention, all their effort, their capital, their expansion, their profits are coming from AI, not the metaverse. And there's even some reports that they're like, he's kind of like shunning away a little bit all the metaverse reality labs projects and focusing way more on artificial intelligence. So it's one of the companies that I just missed. That happens a couple times. It's not a big deal. I can name off a whole list of companies, FICO and Spotify, that have gone up as well. But the ones that I've gone into, the Netflixes, the bookings, the Salesforces, they've done incredibly well. I'm happy to see Meta do so well. What a company. Overall, I like the reports of Microsoft. I like the report of Meta. Tesla, look, it's all about the story. The numbers don't look good. Tesla investors will probably tell you the numbers don't look good, but they will instruct you that the numbers of the past 3 months are not what's important. It's whether or not Tesla can accomplish this bigger goal. So to focus on the forest and not the trees. And I think that's the attitude you have to have investing in Tesla. In my opinion, when I look at it, it seems pretty risky to me. So it's not something I'm too interested in jumping in, at least right now at this price point. But the story's there. Another company I'll mention, you'll see this from time to time. And this is something, if you're a new investor, just to be aware, you'll see companies randomly like Salesforce get dinged after a day like today. They're down 2% on the day. That is because ServiceNow, another large enterprise SaaS application company, posted and investors didn't like the report. So that one's down 7% on the day. And when investors say, oh no, ServiceNow did terrible or something bad happened that we don't like, they try to sell off similar holdings that have the same type of business or exposure, the same type of customers before the rest of the crowd does. So they can get ahead of that stock trading down. So Salesforce is down today because of ServiceNow's report. It's called a sympathy trade. That's normal, not a big deal. ServiceNow and Salesforce are different companies. So even though the market likes to price them like they're the same thing, they're different companies. They'll have different reports. They do have different customer value propositions and such. So that's my thoughts overall. I like where Microsoft sits. I really like Meta's report. It's by far the best report of the day, better than Microsoft's by far. Tesla had the weakest report by far, but it's Not so much about this report. It's about what Tesla can do in the future. If you're a believer in that, then these reports don't really matter. That's going to be it for now. Hope you enjoyed the little run through. See you in the next one.